All right, and welcome back for another episode of Carnivore Trades. Today is Tuesday, July 5th, 2022. If you're not done so already, give video a thumbs up, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. And take advantage of more winners like Carvana today, up 15.2%. Gains, second time we traded it this year, traded it last month for 22.3%, as that stock is now squeezing up about 27% for the day. Humongous move off the lows with a lot of other things too. So 26% gain there for Carvana. Look at these growth plays: Shopify, Square, Arc here coming way off the lows, up 9%. I believe Twilio was up big earlier. Yep, Zoom. Take a look at IGV. Look at the move here in IGV. Biotech, XBI. That's a huge move for biotech. 5.7% there on the XBI. Lots of other names here, even names like Pinterest up 8%. So these growth stocks are performing really well. And the WV patterns we talked about on FANG, or I've talked about the last week or so, take a look at Apple here, starting to play out perhaps. Look at Google. Look at that surge on Google there, up almost 5%. Call it 4.5% there. Tesla, again, putting in those higher lows there. So, well, what's going on with this? Why is the money rotating into tech? And take a look here at how well the triple Qs outperformed the spiders this morning. Very, very unusual to see that much of a discrepancy. The Dow was also very weak this morning. The Russell did perform weak initially, but came well off the lows and is now leading with the Qs. And you guys know the old kind of rule of thumb: if the NASDAQ and the Russell are leading, that's usually a bullish sign for the market. Well, essentially, there's been a ton of recession talk over the weekend. Take a look at the spiders here, squeezing into the close. Markets close in a couple seconds here. So a nice pop there for the spiders. And a nice move for tech across the board. There's the closing bell. But essentially, we're getting recession talk. And what's happening here is the spiders were weaker than tech because fins were getting hit. We had a yield curve inversion, 2s and 10s today, and XLE took a big hit. So essentially, investors are dumping fins and energy and buying tech. What does that mean? It means they're pricing in a Fed put. Yes, they're already pricing in a Fed put. They're pricing in rate cuts that will probably happen. It's very possible that they actually happen later this year, or at least a pause. Now, we're not talking about rocket ship to all-time highs. This is going to be a different type of a Fed put. It's not. The Fed won't be able to do the type of QE that they're used to doing with the supply chain still as broken as it is. But this is essentially the way the market's looking at it. And you guys know I have been talking about cycles, pivot points. Coming up this week, I said that I expect a low to be put in, if not already by last week, then by early this week. We may have gotten that today, but we do need to see follow through. Nice move for the Qs, just a 1.71% gain, but when you consider where they opened, it's a pretty impressive rally. Same thing on the spiders here. Again, up just 19 basis points, but look at the daily candle here, engulfing candle there. It's not often you see two consecutive up days with an engulfing candle. Very, very strange. But that is the type of price action you get when you have rotation. And when you have money rotation, usually there's a market turn that follows it. So I'd say there's a really good chance we have of putting in a summer low. And I know we've been talking about that, and basically everybody's been looking for that here. But again, we'll have to see follow through, but there is a good chance that it has happened. Now, what could the other catalyst for this be? Well, I'm glad you asked. So let's take a look at some of these commodities here. Actually, let's look at the dollar first. I know we wait till later usually to look at the dollar, but dollar surging up 1.3%. So, okay, big deal. What does that have to do with anything? Let's look at gold. Getting whacked today, down 2%. The big move for gold. Silver down 2.5%. Copper down 4.7%. Platinum down 2%. Palladium down over 1%. Corn, soybeans, wheat all down 5% or more. Okay, I don't see a trend. I don't see a trend here. Okay, crude down 8%, was down 10%. Nat gas down 3%. Starting to see more of a pattern here. How about when I do this? Halliburton down 8%. Raytheon down 4.2%. And Lockheed Martin down 4.2%. So we're seeing commodities crash, the dollar rise, And furthermore, what is the dollar rising against? Well, let's take a look. It's actually rising against the ruble the most. 14% gain there. Defense contractors down, commodities down, dollar up versus the ruble. There's your catalyst right there. So who's to say, at least I wouldn't be surprised if somehow there's magically a peace talk or some type of a truce or agreement that takes place this week. Again, this is just speculation, but it's a pretty compelling argument there. I mean, it's not a coincidence, if you ask me, that specifically defense stocks are down, commodities are getting hit, and the dollar's gaining on the ruble. Definitely very fishy. Again, could be nothing, could be something, but that could be your catalyst for a squeeze, because if that does happen, the markets will go gangbusters to the upside, at least in the near term. So there's your kind of thesis there. Again, we still have to see follow through because they've pulled the rug on, we've had these nice rallies, nice little short rallies. We had the 1 day pop here, the 1 day pop here, and they were able to fade it, 1, 2 day pop there. And they've been fading the rip the whole time. So there's no guarantee here until you really make a higher high. If you take this high out, that'll essentially be your first high since really, back to late March. I wouldn't even really call this a pivot high. So this would really be your first higher high on the spiders. And if we can take that out and get follow through, then I think there's a good chance we probably put in a summer bottom and maybe things can quiet down for a bit. Basically that's all we're really looking for here. Anyways, let's look at the Russell. We talked about that. So nice little, again, kind of an engulfing gap down and then an outside day there on the Russell. So again, Russell showing strength here, up 83 basis points, outperforming the spiders and outperforming the Dow, which actually closed negative. So I like it when I see the NASDAQ and the Russell leading. There's usually a good sign. Another good sign, semiconductors. That is, we call this a dip and flip. So gap down and a nice recovery to close green by the end of the day. So they defended this trend line, and I showed you guys the other trend line here going back to 2015. That looks like it's getting defended as well. So nice little reversal there for the semiconductors. Take a look at Micron today. By the way, full disclosure, I do own this. I do own Micron. We did pick it up again after earnings, after trading it last week. So we're nicely in the money on that one, up 5.74% today. Huge surge there for Micron. Nvidia lagging a little bit. Still up 3%. Nice little reversal. And AMD, same thing, up 2%. But nice moves there for the semis. We talked about IGV here. Again, down move, WV pattern. Looks like it's starting to play out. So we got to see follow through, but nice pattern there. Biotech again. WV pattern. We talked about that inside bar and how biotech was looking good last week. Nice pop today, so almost 6% with that last surge there into the close. And finally closing above that 100 period moving average. So nice move for biotech. One of the weaker sectors, Dow Transports, still on the weak side here. What can you say? It's just been a rough industry group. Still down 50 basis points for the day. It's still holding this inside bar. So, if the market rallies, this can rally. But this is a laggard, and, you want to see this play catch up here sooner rather than later. All right, so we talked about rates a little bit, but we did have an inversion here. 10-year still basically filing back. Looks like it wants to head to that gap fill. And then you've got that 100 moving average there. Maybe it gets a little bit of a bounce in the short term, but we'll see if it starts to put in a lower high. Then it can go back into corrective mode if it takes these pivots out. So yields backing off a little bit. Same thing there on the 30-year. You've got that gap there on the daily. So we'll see if that can get filled. So get HYG here. So HYG again, testing the lows and getting a nice rally. Same thing with the JNK and LQD there. TLT also had a nice day as well, finishing green, up 79 basis points. So nice little move there altogether. Home builders, another strong sector. So this has been a weak sector, and it's like a lot of the sectors that are rallying hard are some of the ones that were hit the hardest, which makes sense. Rubber band theory, the farther you stretch it, the more it's going to snap back. So home builders, XHB getting a nice bid, 2.5%. Also just under 3% on ITB. Nice little pop there for the ITB. And then VNQ, a little bit of an inside day. So a little bit underperformance there from VNQ, but it did recover off the lows. So it's holding up for now. Now, financials, we talked about being weak. But one thing I find interesting here, so XLF was on the weaker side, yield curve inversion, that makes sense. You still have a little inside bar here on the daily, but what's intriguing to me is we had a 2 and 10 invert today. and the broker dealers like had an outside day. I mean, this inside bar actually played out pretty much to target. So up 3% there on the broker dealers with an inverted yield curve. That doesn't make sense. It shouldn't make sense, but you know, maybe that's kind of going along with the somebody knows something type theory here about all these defense stocks getting clobbered and commodities getting clobbered. So definitely find that a little suspicious, but there was, you know, everything was all over the map today. This is definitely a very weird tape, but broker dealers did hold up. So, you know, that is a positive, I guess. Anyways, we talked a little bit about energy. Crude down 8% here, making a lower low for the first time since April. And this one was barely, you know, it was kind of a fluke. It didn't really even, there was no follow through. So really the first major lower low. I mean, this was just kind of like a baby little pierce. This is the first major lower low. So crude could be in corrective mode. We've lost that blue trend line now. So it may be headed to 90 bucks there in the near term. And I think that will be good for a pretty significant bounce. You got this trend line right there. You know, that 20-month moving average is below it. So we'll see what it does here. But crude may finally be in corrective mode here. XLE, we know, has been in corrective mode. That was weak. It's got some support at the 200, but you already kind of came down here and bounced close to it. So I would give this a little bit more of a downside bias at the moment. But, you know, it's hanging in there. It's got a fair amount of support. It's going to need to consolidate if it does head lower. XOP, same thing, obviously, although in a weaker position below that 200. There's a lot of support here, though. A lot of daily chart support there. So look at that long base of consolidation. If we look on the weekly, you see that big base there. So that's basically what you're into now. And you're short-term oversold, so maybe this can get a bid here. And OIH also on the weaker side, the weakest out of those three, making lower lows there as well. And then nat gas, we briefly touched on. This one did manage to hold up okay. This was a little bit more oversold than some of these other commodities. And considering the surge in the dollar, it's really not down that much. You know, it barely took out last week's lows, and it got a decent little bounce. Dollar index, obviously we talked about this. This is starting to get into parabolic mode, and it's starting to get, it was already overbought. It's been overbought for a while, and we've been saying, you know, we need to respect it. You know, don't get out in front of it, you know, at this current time. But it's now starting to enter parabolic territory, if you ask me. Take a look at the weekly, just straight up here. The moving averages starting to go vertical. The monthly, very extended from your 20-period moving average. So there's a chance this could still, I mean, I wouldn't rule out a move up to 108.50. I told you guys that level is up there, but there's a chance it could, you know, get rug pulled really quickly, or, you know, maybe if it does get up there, it does it really fast, because this is starting to look like it's trying to put in a blow-off move. But we'll see what we get. Again, it remains strong. Take it one day at a time and definitely respect it. Obviously, gold lower as well with the strong dollar, but still holding up well relative to other commodities. Gold doing its job here, but the inside bar on the weekly does appear to be starting to play out here. So you have kind of an ABC down with an inside bar there. So that should head a little bit lower. I don't think too much lower here on the daily chart. I mean, you should have some good support around 1750 in the short term. And then we'll kind of reevaluate it. But again, if the dollar does start to decline, it's going to help out these metals, is going to help these commodities, which are very oversold. So we'll see what we get. Silver also continuing lower. This does have decent support around here, around 19, but new 52-week lows there. Platinum finally into a very good level. Well, another disclosure, I am long PPLT. So that is, been waiting for that level to hit for a long time, and we finally got down there on spot platinum. So 840 right in that range. Again, very oversold as well. Palladium really kind of bucking the trend, and really just kind of a quiet day there. And then copper getting all the way down to 340. I still think this can head a little bit lower. You do have that 200-week moving average, but I would like it a little bit better at 315 or 320. But overall, just a big dump here in commodities, mainly caused by the strong dollar. And obviously recession talk's not helping. But again, lots of fishiness going on here. And we'll have to see what we get tomorrow. If we get follow through, it'll be interesting to see if we can put in that summer low. Anyways, Bitcoin here. So finally rallying with the market, and now you may potentially have a higher low. So I've really been saying over the last couple of weeks, like, I want to say something nice about Bitcoin, but I can't. It's really got to get above that 20 moving average to give me anything be excited about. And the only thing that is good is that it's, you know, there's so many bears that it's almost bullish. And sometimes that can be enough here. You know, you can get a short squeeze and then price can really break out. But you did get above that 20 moving average, got to close above it. Bitcoin closes at 8 p.m. for the new day, so we'll see if it can hold that. And then your next step is getting through 20,869. If you can get above that, you know, then maybe we can talk about 22, 23,000. But, you know, nice to see Bitcoin finally get off the canvas a little bit, and possibly, you know, to its credit, it's held this tail low. So I said they stopped out a bunch of people on that 20,000 flush. They clearly did that, and it's been weak as all hell, but now it may be starting to put in a higher low. So if this does get going, again, that probably gives the equity markets a lift, and it probably signals that there's a little bit of risk coming back into the market, which would confirm the risk on that we're seeing in stocks like Carvana, Shopify, you know, Square, big tech, biotech, all those names that we were just talking about earlier. So any case, market's not out of the woods by a long shot, but this is an impressive reversal here. Look at the gap down in a bear trap. Nice little surge there for the spiders. Tech leading, Russell leading. That's what you like to see, but we need to see follow through tomorrow. Anyways, guys, gonna wrap it up here. Take care. Come find me on carnivoretrades.com, and I will talk to you all tomorrow.